Welcome to Uncaged. Today we're talking about a very, very important topic in the commercial space, which is fintech. Fintech is actually, I'd say, one of the fastest growing verticals. It's one of the ones that people are pinning a lot of growth hopes around, and it's certainly reshaping our broader financial market. And so we've brought together some gurus today to talk to us and share with us their wisdom. We've got Igor Ulis here. He's the general manager of Hudson Technology Systems. We've got Diego Szteinhendler here. He is the Senior Vice President of FinTechs and Crypto in Latin America and the Caribbean. And then we also have Gopal Swamy, who is the CEO of Conductive. I'll have them tell you a little bit more about their amazing careers and what they're working on right now to set this thing up. But I'm excited to kind of get going also to talk more about all the things that are happening in the FinTech space. But before we do that, let me kind of throw it over to the three of you. Gopal, why don't you introduce yourself and tell us a little bit about you and Conductive?
Yeah, sure. So first of all, thanks for having me here. This is a lot of fun. I love talking about not just what we're doing in fintech and Conductive, but what we're seeing.
Yeah,
And
absolutely.
so Conductive maybe has an interesting take on things, right? We're a B2B fintech. We work with a number of credit unions and community banks, CDFIs. And what we do in a nutshell is remove friction in lending so that these kinds of lenders can lend faster, can lend better, and can reach different populations, lend deeper into FICO, both in consumer and small business lending. So Conductive has been around for a couple of years now. Um, we have some fantastic investors from the credit union and community banking spaces, and we're growing quickly.
I find that space really, really interesting as we rethink who and how things are credit worthy. So I'm all for the recalculation of those things. But Diego, why don't we hear a little bit about you?
Sure. Different than Gopal. I've been in the financial payments industry for a while with big names like Discover, PayPal, MasterCard, and a few other startups, and currently running the fintech segment. And you also mentioned crypto and enablers, which someone like Conductive would be an enabler in our case for the Latin America region, which is a very interesting region. The last few years I've spent in, you call it payments in the US and North America, including Canada. And now going back to my roots in Latin America is really incredible, the type of innovation that you see here out of need and the differences in financial inclusion, which I think is a variable that is talked about in North America, but not as relevant as it is in these markets. So looking forward to the discussion.
Yeah, absolutely. And certainly, being in Miami, I see a lot of that innovation coming from Latin America. So I'm excited to hear your thoughts on that. Igor, let's round this out. Tell us a little bit about yourself.
Hey, Igor Ulis. I'm the general manager of Hudson Technology Systems. I've been in fintech for almost 4 or 5 years now, so not as long as the other guys. Prior to that, I was in sports media, running started and ran one of the largest consultancies in that space. Went into fintech because needed a new challenge, and Hudson certainly has been a fantastic company for me to learn the ropes and figure out what the world's about. We are a payment facilitation platform, meaning that we predominantly build payment workflows and enable other B2B companies to facilitate money movement exactly the way they need it.
Mm-hmm. Amazing. I mean, I think that all three of you are clearly playing in this fintech world in areas that are changing rapidly. So it'll be exciting to hear your thoughts. And I'm just going to try to really start there. I mean, I was in a big fintech conference this week here in Miami and was listening to loads of entrepreneurs talk about lots of new ideas that they're launching in a variety of areas of fintech. But I'd be curious to hear from the three of you what you see as the hot topics for 2024. Gopal, why don't I start with you?
Sure. So from the lending perspective, and particularly from the smaller lender perspective, there's two things that are really big right now. The first is the hunt for deposits. Obviously, the COVID stimulus money is going, or gone. And so the capital that the lenders are using to lend with is reduced. So where are they going to get more capital, right? It's deposits. And so lenders are actively partnering, excuse me, with fintechs and trying to find strategies to help them get deposits, and also with fintechs that can help them make smart decisions about which loans to make over others with the lower levels of deposits they have. The other thing that's really big right now is this idea of a pent up demand, not just for mortgages, but for personal loans, for HELOCs, and even credit cards this year. And so the lenders we speak to, they want to prepare for that growth now. And it's really about, how do I increase efficiency and scalability, but I don't want to make any large changes to my lending model, because we know the demand is coming.
Mm-hmm.
And so I think
So like a
those are the two.
prioritization really of those leads. Well,
Correct.
I mean, Gopal, they should just prioritize my loans first, if that's good. Just make sure that happens and maybe give
Well,
me
you're
a
second.
ridiculously low interest rate.
You and me both.
Sounds good. Igor, how about you? What are you seeing out there?
So we're seeing a more stringent focus on compliance and regulatory aspects of running fintech businesses. Certainly, over the last 12, 24 months, there have been, a number of stories of new regulation, new rulings that have been coming down across the industry. So certainly a much larger focus on that aspect of operating a fintech business. We're seeing a lot of focus on running a leaner organization that is much more focused on automation engineering and getting more done more cost effectively. But that had to do with kind of the fundraising aspect of last year, and how a lot of that happened to get these companies to become a lot more capital efficient, fintech companies specifically. And obviously, that also leads to a stronger adoption of AI and ML in the space, and those are all kind of interrelated concepts. And I'll also echo the kind of the interest rate environment causing a lot of financial institutions to reconsider how they go about getting their capital and using their capital.
Yeah. Well, certainly, I think some of that governance stuff is getting more and more focus for sure, and we'll see how all that shapes. Diego, what are you seeing?
For me, it's really hard because we tend to look at the whole spectrum of fintech, and I've even heard people say every company is a fintech these days, because if you're
Wow.
paying or receiving money, then all of a sudden you're going to try to become at some point a fintech, and that goes to one of the trends that I'm seeing, which everybody's calling embedded finance, which for me is basically that, enabling everyone to become a fintech. But I tend to group, because it's so broad, I tend to group things in four. One is what I call experience, which usually I bucket there any business model that existed already, and that they're either providing a better experience, faster, quicker, lower barriers to entry, or a cheaper experience. Think of that as a neobank, in some cases, wallets, new lenders, etc. Then in the payments world specifically, there's another bucket that I call payment rails. So we used to do checks, ACH, cards, and now you have others, right? It could be cryptocurrency, it could be faster payments, which the US is just getting there. It could be alternative payment methods, which are really big outside of the US. And those are starting to come over. And what comes with each of those payment rails and how you decide to use each one of them becomes critical. Then I put digital assets as a whole in its own bucket of things. So you have the blockchain technology, tokenization of assets, Bitcoin as it is, and central bank digital currencies. Stable coins is the other one. And lastly, in cross-border as well, which is relevant in this market, not as much necessarily in the US. And lastly, I put anything that's data-driven, whether it is usage of data or protection of data.
Yeah, no, I've seen a lot of interesting stuff in that data space. I was really curious about that company Built and what they're doing. Thought that was very, very clever, and certainly it's a huge data play in that world.
And a MasterCard.
Yes.
So that one.
I hear MasterCard's doing amazing things as well. Of course, of
But yeah,
course.
data, I think it's really important. You hear a lot about AI, machine learning. You hear a lot about identity. You don't hear as much about fraud and cybersecurity. I think it's starting to, and there's even regulation that might be coming, but you usually hear more about using the data and not about the governance of the data. AI is bringing some of it, but I think
Yeah.
the governance, the fraud capability, the protection of the data is going to become more and more critical.
Well, not to drive the three of you crazy, but I mean, certainly I hear AI mentioned in almost every fintech discussion and pitch that I'm involved in. And if, 2023 was the year where it seemed like the world woke up to the fact that AI was happening, it really does appear that 2024 is the year where companies actually invested in this and are starting to implement some things. I looked at one study from a company called Pigment that said that 92% of finance leaders are already seeing value from some form of AI within their business, and 68% would consider its input when making a business decision, which is incredible. I mean, because I think that whilst we know that technology is a huge part of the financial world, it's also a community that is very skeptical and wants to make sure everything works perfectly. It's regulated. And so I thought that was really interesting. But Igor, I mean, you mentioned AI up front. Where are you seeing we are right now in terms of adoption in the fintech world?
Sure. So um, there's a lot of conversation about AI replacing people or replacing things, and I fundamentally don't think that's the case. I don't see it that way. I see AI as an enhancement methodology rather than a replacement methodology. And what I am seeing applications of AI in the fintech space are relevant to the speed of getting to outcome of whatever transaction you're seeking to gain, right? Whether it's a decision on making a money move from point A to point B, whether it's figuring out if the inquiry is fraudulent or not, whether it's making an underwriting decision by being able to extract data from static documents and then methodically use that data to make a decision. But these are all enhancement strategies that allow you to make a decision faster, cheaper, better, rather than replacing the actual decision that is being made or replacing the people that are in the middle of making that decision.
Right. So kind of a wonder ingredient. So pushing the food to be a better meal, basically. That sounds great. Gopal, tell us a little bit about how you're seeing AI impact your work.
Yeah, firstly, I think what Igor is saying is exactly right. And from our perspective, it's hard to paint banks and credit unions and smaller lenders with the same brush. Just because you're bigger doesn't mean you have a propensity to adopt AI more, and just because you're smaller, it doesn't mean you're more skeptical. So what we see is some organizations are adopting AI quite whole hog. Some are dipping their toes in, and some are waiting to see. I think that generative AI in particular is getting a lot of attention from lenders because of really what Igor just said is that is seen largely as a way to do things better. Now, as long as you can keep control over, the generated content, then as a bank or a lender, you'll be comfortable with that. For those who are more who are willing to lean in more, there is a lot of use of machine learning in lending, and specifically the digitization of data aggregation, like income data, tax data, things like this, and then using that data in the machine learning to speed up the lending process and improve customer experience. And as he said before, make it easier for customers to transact with lenders. And so the other point also that Diego made about data, I was nodding my head very much so, because these, whether you call them alternative or not, but these new data sources, these permissioned data sources like Plaid and things like that, they're changing the way that lending is functioning, but they're also changing AI, because look at all that rich data that you can put into the model, whether it's lending or loan servicing or other aspects of your operations. That is very much what we're seeing, and coincidentally what Conductive does.
Yeah. Well, I mean, AI clearly is impacting a lot of different areas and certainly offers the promise of improvement and greater efficiencies and maybe even greater scalability. But Diego, I mean, I struggle to kind of place the pace of all of this. I'm trying to figure out how is this going to impact things. I thought I had a pretty good gauge on how fast all this stuff was happening until I spoke to a team of really like the kind of the blue bloods of Silicon Valley, and they scared the bejesus out of me. They are investing at a pace that I didn't fully comprehend. They were bluntly aimed at disintermediating everything, right? And it was kind of like one of those shock and awe moments. So clearly, a ton of capital is being placed in this direction. How fast is it going to revolutionize our world?
Good question. I wish I knew.
Yeah.
I think faster than the adoption of other technologies, and we've seen it just by how fast OpenAI has gotten to $2 billion in revenue and the amount of people using it and the noise that we're seeing in the market. The reality is that companies like ours have been using AI for a long time, right? What has changed is the computing power and the amount of data that you have and how to connect the dots within all of it that is now available. That wasn't pre-internet, right? Now we have every device tracking every single thing we're doing, and making sense of it becomes extremely hard for the human eye. And that's really where AI is helping. I think initially it will all be about efficiencies, but not necessarily. I think the way Igor and Gopal mentioned it, it's going to be exactly right. It's not necessarily about getting rid of all the people, but I think there's certain processes that will go away and we'll use resources in a more efficient way. Then you have applications like the way we've been using it for a long time that are getting better because of the technology and the computing power and the data, like fraud. Fraud automation has been there for a long time. We make decisions on over almost 150 billion transactions within 50 milliseconds. But how accurate is that decision if I have more data and if I can cross-point it from other sources into making that decision efficient and accurate? Same thing with identity, right? We're all, yesterday, Valentine's Day, we're all about the Roman scams and how do you figure out if it's the right person or not, or deep fakes, right? Which is part of the AI coming through the bad guys. So I think
you telling me that woman that said she loved me was a deep fake? How disappointing.
You're very good you're very good looking, so that one was probably true. But other than that, a ton of that going on their own way. Now, when do we get to that point where it's true automation? Can't really tell you, but what I'm hearing is it's a little bit longer of a path than what we believe will happen right away. I think the right away are processes and efficiencies that will make us better, but not necessarily that full automation, that robotic Terminator-like scenario.
Yeah.
Sometimes get.
Yeah. I mean, I think what I was hearing in the conversations that I've been part of, and I obviously have done some doctoral work in this space, is that most of the money is going into real foundational plays. And the stuff that will be kind of customer facing is coming, but it's kind of going to be built on these deep, deep platforms that are being really invested behind. But one of the breaks certainly we see that has slowed down innovation in general is this wonderful topic of interest rates. 2023, I don't think there was a business conversation either inside my companies or outside that didn't involve a discussion on interest rates and how, what direction are they going? Were they going higher? Were they going lower? Were they staying the same? When you guys look out at the macroeconomic situation right now, how do you see that impacting fintech development? Gopal, let me start with you on that one.
Well, for us, it's a waterfall. And the question is always, how is it impacting the lenders? And I think we know, right, that I mentioned it before, there's pent-up demand for sure. And so lenders are very much waiting for the Fed to indicate that they're going to make cuts. Then they're waiting for the cuts to happen. And then they're waiting for actual increases in the loan volumes. And so what we see is that the lenders are broke into into groups, and there are forward-leaning groups who are willing to move now to prepare for that. There are sort of more wait-and-see folks who are thinking about doing this, and then there are folks who are saying, no, I'm really going to wait until there's proven demand. And so in terms of fintech investment, I think that, I mean, and in fintech innovation, there's so much money thrown into this and
Yeah.
into AI, as you were saying. And I'll just say this last thing, AI is a broad term. So are we
Yeah.
talking about really statistics and data science? Are we talking about machine learning, or are we talking
Yeah.
about something more? And what we see is a focus in fintech on and investment on really data science and machine learning.
Yep.
I think you're exactly right. There is this larger investment that's in the foundational part of, I forgot the term, but like human AI,
Yeah.
and that's different.
Yeah. Yeah, you're absolutely right. I mean, I think they'll all kind of work hand in hand in some form or fashion. But Diego, I mean, what are you seeing with these interest rates?
Yeah, I'm going to talk more from a contrarian point of view.
Cool.
Obviously, what we see is all the startups popping up, right? And that was what was going on, and money was cheap, so anyone would get funded, and anyone would get valuations that were out of this world. So the reason I'm saying I would go contrarian is I think that this shift in interest rates is making founders, either existing or new ones, way more conscious and getting to profitability faster and having a more sound business case. So whatever and when it happens that they start going lower, we will get a new batch of fintechs that is stronger. In the meantime, while that happens, I see some that were lucky that raised right before and have 24 months of run rate. Others that are either folding or consolidating or completely changing their business case. But that path to profitability for me is the contrarian view of maybe it was a good thing to a point that made people think twice of what is the right business case and what is the right go-to-market, rather than raising $50 million with a PowerPoint and then trying to figure it out.
Yeah, no, you're absolutely right. I mean, I am seeing a real range of experiences with raising right now for startups. You'll see companies that'll have 20, 30 million in revenue and they'll really struggle. They'll struggle because their burn rate is too high. People aren't seeing the revenue that they should get from that type of a burn. And then I see other ones that are just like nowhere near any type of a commercial model, but the technology they're working on is unbelievable. So it's a real range. I mean, Igor, how are interest rates impacting you?
I'll echo what was said earlier. Certainly, there's been this shift from growth at all costs to now capital efficient growth, and that has caused a lot of the early stage fintechs, as well as kind of more senior level companies, to reevaluate how they go about hiring and operating their businesses. But at the same time, I think I see that as a positive sign, right? Meaning that these companies will have had to shift mindset at some point, no matter what, and this was just the right impetus for them to do so.
Yeah.
Certainly, the reset in company valuations is driving a variety of companies' abilities to raise at this new norm, if you will. But again, I see that as a positive thing. I think that should attract more capital and should attract more diligent capital as it makes its way back into the market. The interest rates have also had an interesting way of moving capital around the overall industry in terms of attracting deposits, where people have been able to, or people would want to shift their savings or cash in general to higher interest bearing accounts, which usually sat at larger institutions that were seen as more stable, which then have caused kind of the middle and lower market financial institutions to think about ways of retaining or attracting that capital back, which ultimately became, how do I build the right technology or offer the right tools to offset that departure of capital so I can attract it back into my institution. So again, I see this as a kind of the new norm, and I think it's here to stay.
Ooh, well, I'm hoping it stabilizes a little bit for all of our sakes. But, let me kind of shift back to the three of you and the three businesses that you are leading. when we look at 2024, as we've talked about a lot of different topics today and where things are going. Gopal, let me start with you. I mean, what's your big area of focus this year, and what's your team really passionate about in 2024?
Well, we have a lot to be excited about. We're helping a number of lenders do the things we discussed about. Be more efficient, leverage, in our case, data science, leverage data, permission data, so that they can not replace people, but do things faster and better and be more competitive. And so with that comes a lot of data on our part. And for us, it's headless data, because what we want to do is track the patterns in the data using data science. And so we're really going to spend this year sharing that success and building out the machine learning models, because while we're fully a for-profit company, we do have a double bottom line in the sense that it matters to us if we can increase impact or increase equity in lending. And bear in mind, this is exactly the stuff that our customers, the credit unions and the community banks and the CDFIs, that they want to do.
Right.
And so it's a nice alignment, and that's really what we want to do this year.
Yeah, I mean, it is an alignment because there's a lot of opportunity there, I think, for everyone from a value creation perspective. Diego, 2024, what are the MasterCard folks thinking about?
Yeah, there are multiple things on those four areas that I discussed, and obviously our core business is one of them, and you could talk about anyone that's launching a card, especially in this market. I think in Latin America is still a lot of room to grow because of financial inclusion. We've gone in 2017 from 54% of penetration financial inclusion up to 74, but that still is far away from a developed economy. So I still think there's a run rate there. The other two pieces that are extremely important in this market in particular is, one, how do we play with other payment methods, which we do all the time, and people would think, well, MasterCard is just a card, but we have invested heavily in technology that allows us to play even with the real-time networks of the world, or even be that real-time network like we are in the UK and in Peru. So those are important, especially in markets, again, outside of the US, where people are paying with QR wallets that you would think they're completely outside of our network. And in many cases, like Mercado Libre, they issue a MasterCard card as well, and there are ways to play together, whether that is in remittances and cross-border payments, or with a card for money out or for acceptance outside of their own closed-loop network. And the third one where we've made heavy investments in is anything around data. And I echo Gopal, right? We have tons of data. I talk about 150 billion transactions.
Yeah.
But beyond that, we've made acquisitions in the open banking space, which is extremely relevant to get more information for lending, for mortgages, et cetera. So we acquired Finicity, Aya in Europe, Arcus in Mexico. We made acquisitions in the AI recommendation space. We acquired a company that was owned by McDonald's called Dynamic Yield that allows you to help you personalize and recommend products to an individual. We acquired companies in the identity space that for me, it's all data and AI. And we believe heavily on building an identity network that goes beyond just the transactionality of MasterCard and how you authenticate a transaction, how do you use biometrics at the point of sale. So those are some of the build blocks. But again, on those four topics that I mentioned, that's some of the things that I see extremely important for us this year.
Yeah, I mean, I'm realizing that the complexity and the granularity of every one of your companies is going to absolutely continue to shift and change. Igor, 2024 for you guys.
Well, I'll echo what Diego was saying earlier in terms of, there's this general thesis of, every business will ultimately become a fintech business, and then, whether it's through embedded fintech or other means, as a payment facilitation platform, that's our job. Like, we want to work with more business partners to allow them to create new revenue streams and take more control over the payments they're taking or the money that they're moving through their ecosystems. So that's a huge focus of ours. Automation and figuring out how to move money predictably and confidently from point A to point B, that continues to be a large focus of ours. And ultimately, it's attracting the right talent and continuing to grow our team. We've seen a lot of hiring and then a lot of layoffs in the industry over the last few years, and we want to make sure that we continue to grow diligently and as capital efficiently as we can.
Well, one constant for sure will be more and more change. I'm going to give you guys a chance to kind of throw out a last word here. If you had to tell folks that were, let's say, small to medium-sized business owners out there or executives in some of the, let's say, Fortune 2000 companies, and they need to think about one thing in the fintech space this year, what should they be getting their head around? Gopal, let me start with you.
That's a good question. And
Maybe it's
fairly
impossible.
broad. No, it's such a good, I mean, I do say it would depend on what business you're in, what sector you're in, right?
Yeah.
But I would say this. I think it's cliche, but whatever it is you're doing, chances are to some extent you're going to have to become a fintech. And that means you're going to have to partner with one or many.
Yeah, I
Some
love the
kind of a
fact that I'm going to
strategy
be a
to do that.
fintech as well. I've always wanted to have my own bank, so there you go. Igor, how about you? What's the one thing?
I mean, look, this is obviously, self-serving and this is a fintech-centric conversation, but, I agree with that. Ultimately, every business deals with money, right? Money in exchange for products, services, or whatever, right? Money is fundamentally at the heart of what makes these businesses, survive on a day-to-day basis. And the more you understand about the money movement that is impacting your business and how you can take more control of that money movement, and then in that become more of a fintech centric business, the better of a business you're going to be. And so that's that to me is a focus of ours, and we help our clients think about that, wrap their heads around it, and continue to grow their businesses.
I'm going to steal
Excellent.
that term. Fintech centric is
Yeah,
great.
fintech centric. I love it. I love it. Diego, I'm going to give you the last word. What's
You
your
make it
take?
harder for me because I will repeat the same thing. I'm just going to try to say it differently. As you think of fintech centric, it's key to figure out who is the community that you're serving and what is the data that you have available to be extremely efficient. And I'll give you an example that I like that I've been using recently when it comes to embedded finance. If you're a trucking company, right, and you have drivers and buses and the amount of data that you collect, whether that is on mileage, gas usage, payroll, etc., could allow you to become a fintech. And this is really where we are going, right? Well, I know that I'm paying X amount to each driver. Can I extend a loan because I have certainty that they're still employed? And can I have embedded finance to get part of the revenue of that lender? I'm not the lender, but I'm enabling through my ecosystem and the community that I serve to become that. And you can extend that even outside of the community that you serve to your suppliers, to your vendors, to other parts of your business and become a fintech centric. And I think this is what the three of us have been mentioning, but I wanted to take it from the community that you serve and the data point of view. How could you enable that, and why is it so important that we keep?
Well, I think it's another buzzword I can add into my capital pitch deck, and I can say, well, listen, I talked to three gentlemen that told me that I'm a fintech company now, so maybe I can ask for a higher multiple. But listen, thank you so much for being on the Uncaged show today. It's been great talking to the three of you. We've been having a great conversation around fintech in 2024. We've had Igor Ulis here, the general manager of Hudson Technology Systems. We've been speaking with Diego Szteinhendler, who is a senior vice president of fintechs, enablers, and crypto in Latin America and the Caribbean for MasterCard. And we've got Gopal Swamy with us, who is the CEO of Conductive. Thank you so much for your thoughts today. I know this is a space that's going to continue to evolve, and we look forward to having you back.